Hey, good morning. Let's go over today's trade plan. So in yesterday's recap video, I talked about how the market should not really even approach that 93.5 to 94 area if the buyers are to remain in control. And if we head back down towards 93.5, then we are probably going to break because that area had been tested multiple times. And on the downside, the objective below the 92 to 93 half was the 87.75 open gap and 84 to 86 support zone where responsive buyers could still be active. So in the overnight session, we saw that buyers entered right at the gap, and we saw a pretty decent bounce in the overnight session. At this point, heading into the day session, we know that the market can continue bouncing within a range. There really isn't any big economic catalyst that can result in a really big move lower. So at this point, if the market heads down to 84 to 86, or in the event of a extreme down move down to 79.5 to 81.5, these support areas can still attract buyers and result in a bounce back up towards the 91 and 92.5 to 94.5 resistance zone back up here. And now that we don't really have any big catalyst, at least no scheduled economic report that can really drive the market big one way or the other, the idea is that even today the market is just going to for the most part balance within a range. We basically have at this point this range that was established over here, 79.5 up to 2000, 2001. And we can see that there was a breakout that happened around 91, 92. And today we may just see kind of a back and forth and a filling of that breakout level, that 91 to 92 area, where we just develop some more volume and basically fill this breakout area and generate some more volume over here, which means that any break lower down to 84 to 86 can still attract buyers, resulting in a move up, and then this area would serve as a decent profit target around 91 to 92 half. And on the upside, if we end up filling the gap and going through this 92 half to 94 half resistance, then we can still get sellers at at the prior VPOC 97 quarter and at 98 to 2000, the initial resistance zone on the day. And sellers can still be active over here and result in a move back down towards that 91, 92 area. So overall the expectation is for the market to continue bouncing in a range. It's just going to be about determining where that range can be. Based on the overnight session, we know that there is a bit of weakness in this market, and we could be heading down to 84 to 86. So off the open, we do have to be a bit cautious on long setups and assess the market in real time to see just kind of the buy responses that we are getting in the market, because right now there is still there is still a bit of downside potential here. So the market could still head down towards that 84 to 86 zone, and potentially in the event of a higher momentum, higher volume push, potentially down to 79.5 to 81.5. And again, those are spots where buyers can enter, so we will look for long setups at those zones. The only time we'll be cautious on the long side is if somehow today develops into a trend down type day, which right now there are no signs or indications that that's going to happen. So unless we see something in real time that shows us that there's just much more selling than expected entering the market, we're going to stick with the balanced session idea and look for long setups on pullbacks into support, potential for short setups on pops into resistance, and basically just look for a two-sided session. So those are the main thoughts heading into the day. Let's see how well the sell side can maintain control below 92 half off the open, and we'll take it from there.